We are. Okay, and we are live. Good morning, everyone, and welcome to another episode of the Crypto Hour. Today, we'll be concentrating on the kind of situation that we find ourselves in, especially as we are, not far away, only a couple of weeks away from Christmas, and the specific conditions that are present in the market normally in December, as traders start to wind down and volumes start getting lower on the markets. Okay, so let me go straight into it. Okay, let me share my desktop. Okay, so first of all, we start from the general economic macroeconomic situation. So as you can see, fairly a light week in the terms of big announcements. The main thing probably is going to go on today in the US. Kind of like inflation figures are being published. So this is the one, the PPI month on month, and generally speaking, these are the numbers at the moment everybody's concentrating on, because then the inflation will determine the policy of the central bank and the Federal Monetary Committee. So that sets the interest rates and so on. As we start seeing the same, the first green tendrils of recovery, because we already have signs that inflation seems to be slowing down. And so the action that the Monetary Committee needs to take would probably be less aggressive than it has been in previous months. And remember that we've had successive increases of 0.75%, month after month recently. So a number of inflations carry on the trend of slowing down, would actually make sure then that the Monetary Committee can then progress and maybe still raise interest rates in December, but not as much as the months before. So probably may go down to, instead of 0.75 percentage point, to half, or may even be a quarter. So we'll see what goes on. But the first thing, so one step at a time, the first thing, we'll have to wait for numbers to be published today to know exactly where we are. And there have been some reports, something like the this number here, the services PMI, and which basically is kind of a purchasing managers index in different sectors of the economy. And we can see that any number above 50, it means that there is growth and expectation for prices to go up in the next few months. And numbers lower than 50 indicate contraction. So it's showing basically that the service sector in the US at the moment is still growing, and we have seen actually several indicators that paint a picture that the US economy is starting to get out of the recession that it has been for the past 6 months. So let's move on and start talking a little bit about how this is affecting the cryptocurrency sector. Okay, so today is pretty much a kind of a green day when prices are going up, but literally what is more interesting to look at the moment is the total market cap. It indicates the total value of the crypto market as a whole. And so as you can see, we reached a low of about just above $800 billion on the 22nd of November, and now the market has started slowly to recover, and we're now almost at 900 billion. Now we'll see that although it is kind of recovering, it's not a fast movement. The kind of like this, as you can see even here, is up and down, up and down, up and down. Okay, Now, and there are reasons for this, because we still have kind of like a problem hanging over the crypto market, which is kind of the fallout of the FTX bankruptcy, and the many different actors had liquidity locked in FTX, and this is affecting their ability to carry on normal operations. So the biggest worry for the market is the Genesis problems, that at the moment they need to find new liquidity to carry on as they were before. At the moment they stopped withdrawals, and Genesis is another one of the big crypto exchanges, and is also connected to the digital currency group that also owns many other assets in crypto, including Grayscale, which is the crypto fund manager by excellence, let's put it that way. And so a problem with Genesis could then initiate a cascade of effects of kind of bankruptcy in different sectors that would affect the whole crypto market. Now, and what I'll show you different things today that show that the market is in a way waiting to see what happens. So we're standing on the fence without taking strong positions, and part of it is because of, as you say, the December generally, most professional traders are out of the market altogether because there is very little volume, and prices can be exceedingly volatile when there is low volume. But first of all, I just wanted to show you here. So this is the Bitcoin prices, Bitcoin chart. Okay, let me make it a little bit bigger so you can have a look at it. So we've been in a sideways market in Bitcoin ever since June. As you can see, it's been between $18,500 and $24,500 so mostly almost 6 months now. And then beginning of November, we actually dropped further below this range. And, since then, again, from the 9th of November until now, so it's been a month, we've been moving into like a tighter range between basically 16 and 17.5. So, when these things tend to happen is that, it tells you visually as well that the market hasn't made its mind up yet. So, is it going to break up on the upside and go back into this, previous trading range that we had since June, or is it going to break up on the downside, and then revisit some of the historical levels? As you can see, this is when the market and Bitcoin started really rising strongly, was in October 2020. So we go all the way back to 10,000. Okay, so if this was to break down on the downside, we could see a retest of those low levels. But why would that happen? And this is exactly what I was talking to you a minute ago. So there are kind of like factors outside of crypto itself, because the FTX problem was not a crypto problem, was a kind of a bad management problem of a company that was involved in crypto, but it was a centralized exchange, and it was a company. So it's a company that's gone wrong. It's not crypto that's gone wrong. Okay. And so because there is this uncertainty behind a lot of, some of these companies that hold a lot of crypto assets, we don't know if that could cause a cascade of prices down to the levels of October 2020. And this is kind of like another thing to consider, is the more time goes on, the more chances there are that Genesis could find a solution to this, and the digital currency group manages to get some refinancing done so that they can support their liquidity, because it's not a insolvency problem with Genesis like it was with FTX. It's just a liquidity problem at the moment, and they will need to find an extra $1 billion basically to finance the liquidity. But the more time goes on without a bankruptcy filing, the more chances there are a solution can be found, especially because they have, like, Grayscale, it's the goose with the golden eggs, because it still produces fees of over 300 million a year. So it's not is not like a company that doesn't have any money, doesn't have any income. It is a company that's generating healthy income that's going through a liquidity problem. So if that can be sorted, then crypto can start growing again in its own way without being affected at outside factors like this. And then we might have already hit the bottom. Okay. And it's interesting to see how there's a and I'll show you this now. Don't take it for gospel, okay? This is something that was making the rounds last year during the bull market, which is called the Wyckoff accumulation distribution scheme, okay? And which goes through kind of like six different phases, okay? Don't worry, I'm not going to spend too much time on this, so I can see the panic faces sometimes when I start seeing complicated charts like this. But so this is basically just to show you that the phases, and it was actually uncanny how closely this related to the Bitcoin chart during the bull market. And now we are on the other side. So whether this was the distribution, the distribution phase. Now, according to this scheme, we are in the accumulation phase. So we would be going through this phase here. It's called the spring, which when the price actually touches the bottom, a bottom is formed, and then it starts growing again. Now, this is so have a look at the chart at the top, and let me make it a little bit bigger so you can see better probably. Is this better on the screen for everybody? Okay, so have a look at the similarity between this scheme and the Bitcoin price. Okay, so this is they've drawn on here the levels of the Wyckoff accumulation distribution test. So we can see here the secondary test is when we had the drop in June. And then we're going through now the spring phases. And if we are, if this is going to prove reliable, then, and funny enough, we've been talking about this for ages. We've been talking that, the first quarter of next year, we're probably going to see a recovery of all the risk assets, which includes crypto. Okay, so it's technology stocks, crypto, and things generally that are considered more investments that are considered more risky. Okay, so if this scheme actually proves true, then we might be looking at a growth in January and then an acceleration in the spring. And we would also consider that we are going towards now, it's only a little bit more than a year away, that we will hit the next Bitcoin halving event, okay, where the rewards for miners are halved. So there will be kind of like lower inflation in Bitcoin prices, okay? And generally what follows a halving event is a boom in Bitcoin price. So that is not that far away now. It's only about a year away. So this is where the real price increase may happen. I don't know that you don't want to hear that you have to wait another year and a bit for seeing Bitcoin hit maybe new highs, but there is a high chance that this is what is going to happen. Okay, let's go now on to it's funny because some people in some of the communities that I'm part of, I started mention Jim Cramer. That if you know who he is, he's on a big personality on CNBC that talks about all things economic, talks about the economy all the time. And he said that most of crypto projects are scams, that Cardano and other things, they're all going down to zero. And it's funny because when you actually try and have a look back at his kind of like tips, so to speak, in inverted commas, if you did the opposite of what he said for the past year, you would be exceedingly rich because you would have beaten all the best fund managers that are paid tens of millions of dollars to do their job simply by doing the opposite of what he says. So when you see in the media and everywhere else, everybody talks like this is the death of crypto, this is the end, things are, this is worthless. This is the best time to buy. It's the best time to buy right now, because what we're seeing from data and not from chit chat like this, like the guys that just want to basically have a catchy title that would draw attention to them, because what people like Jim Cramer are selling themselves. Okay, so they want people to listen to them, so they have to shock. They have to say something that gets, they say, oh my God, this person is saying something. No, nobody else is saying. Yeah, there is a reason why nobody else is saying, because you're making it up. Anyway, what the data is telling us instead is this, is that there are countries and big institutions that actually move into crypto despite the market drop. Because what you need to understand is that now that we are, again, let's look at this, okay? Let's look at where we were last year. Okay, let me just make it a little bit smaller. Okay, so we came down from 67,000 to now about 17 where we are right now. Now, if you believe in the cryptocurrency and you know that cryptocurrency is here to stay, whether it's Bitcoin or other project, but let's talk about Bitcoin because it's the one that everybody knows, okay? So if you think that Bitcoin is here to stay and it would be used in the future for a growing number of users, then what do you think? Is it safer to buy a 60,000 or is it safer to buy a 17? So what the big players are doing right now, they're seeing the potential to invest in a very strong asset without the risk associated with it, because now this is risk for them. Okay, and now they are buying something at a huge discount, so they are actually accumulating, and this is what we see in data here, where there are now although there are some further downsides, but we'll see that the big holders, so the ones with the portfolio, with the larger portfolios, are actually accumulating and buying new coins instead of selling them. Okay, and the ones that most of the coins that left the market at a loss, because a lot of people have lost money as the prices went down, were kind of new investors, because we can see the age of Bitcoin coins, where we can see when a coin had last been transacted, and so we can calculate the moment that somebody sells how long they held that particular portion of Bitcoin. And most of the coins that have been sold have been new coins, where the hodlers, or what they known in the crypto industry, they are the Rick Astleys. Who remembers Nick Astley? Never gonna give you up. Okay, so this is why they called the big holders that are called Rick Astleys, because they are people that will not sell under any circumstance. Okay, and those people are still accumulating. So that should tell you something, and these are the reason why they're accumulating. So, and these are starting to come now thick and fast. This is from just a few hours ago. Okay, so the Malaysian government proposes adopting Bitcoin and crypto as legal tender. Okay, so I'm not saying that it's going to be approved or whatever, but there are now several countries that are looking at going the same way as El Salvador. Okay, and this is going to be really big, because it doesn't just impact a small country like El Salvador, or even if Malaysia was to come in, or any other country that wants to accept as legal tender. But just remember that most countries are classify crypto as a security, as an asset that you can calculate capital gains on. But if they're accepted as legal tender, there is a really strong case that it is actually a currency. It is not an asset. So it changes the whole game for cryptocurrencies. Obviously, Bitcoin being, as usual, the first case. But then we'll see once the barrier has been broken, it would be easy for other cryptocurrencies that have similar characteristics to be adopted as well. So So another thing also that it's interesting to note is that, as I was saying before, this is from this number is actually now is closer to 900 billion than 140. But this is what I wanted to concentrate on: that derivatives being futures, options, contract for difference. So is whatever derives its value by something else, by an underlying asset. And these derivatives are traded a lot more than the underlying assets. Okay, so the futures market, the options market, etc., is much bigger than the spot. So the market in physical goods, they are exchanged, on the back of it. So, and the thing that is to be noted is that the market at the moment, through the drop in price, has deleveraged a lot. So there are a lot of traders are being liquidated, and at the moment they are kind of like not keen to start trading again at a very high leverage ratio because of the risk attached to it. They're not quite sure exactly which way the market is going to go, and they're waiting for signals for the market to start taking one direction before they get engaged again. So we are still in that situation. Then we're thinking, let's go back to the current situation. Very narrow for Bitcoin. This is an extremely narrow range. Okay, so we are talking about not even $2,000. And apart from these days when it dropped, actually you could consider even smaller, even like $1,500 of range, really, apart from this drop from the beginning of November. Okay, so as the market is basically the risk market, it's waiting to see if something else will follow the FTX bankruptcy or not. Okay, so they're waiting to get engaged until that happens. But there are kind of like, as you can see, there has been an interest and a slow, a few tendrils of, so a few green shoots, that people that tentatively are thinking, well, if nothing is happening, and let's say every day that goes by, it's a positive, kind of like no news is good news in a way. Okay, because the bad news is very quickly to disseminate. So every day that goes on without bad news gives a little bit more belief that this problem can sort itself out. Okay. Now, going from Bitcoin to Ethereum, we see similar action in Ethereum derivatives and Ethereum liquidation. So liquidations from kind of like from long positions have now pretty much slowed down, almost finished. And again, it is a sideways market at the moment. So nobody's taking any strong positions right now. And we can see that the market is unusual for crypto, is price action has been kind of low volatility. There's that low volatility at the moment. And again, we kind of like seeing like people are standing at the window waiting to see which way the wind is going to blow. Okay, so are we good? Because traders are generally neutral. They can make money on the way up, they can make money on the way down. It doesn't really make a difference for them. They just want to know, because it's much easier to trade when you know the direction of trade and the direction of the trend. They're waiting for the trend to reveal itself before they start engaging themselves with big positions. And generally speaking, I mean, not so much on the crypto market, but in the Forex and the stock market, the volumes are always down in December because of, everybody is engaging in Christmas and wanting to, thinking about different things than money around Christmas time. And so generally speaking, many professional traders don't trade at all during December, generally, start again in the new year. Now, moving on to different subjects, we've been talking about proof of reserves, and good news is that Binance, they already published some proof of reserves a couple of weeks ago. And now they've gone one step further and they got a full audit from a outside company that could prove that they have actually got funds to to pay out investors if they need to be. And the one thing that came out from this is that not only they are collateralized, but they're kind of like over collateralized. So just from the Bitcoin that they hold, they have enough to cover the positive funds up to 101%. Okay, so they have even more than what. So they don't do what sometimes the banks do with fractional banking. With fractional banking, they actually do the opposite. So all the money is there ready for, even if everybody wanted to take everything out of Binance, they have enough there they have enough Bitcoin to be able to do that. So, and this is, obviously they are trying to appear like the savior of the crypto market. But at the end of the day, they have the funds and the capabilities to do that. So it's good news to know that there is at least one player that is still showing strength in crypto. So for those that are not confident enough to move completely out of exchanging into their own wallets, at least there is one that looks. I mean, I'm not, as again, I recommend everybody to take charge and to start investing in their own from their own wallets, controlling their funds 100%. Remember, not your keys, not your coins. Okay, so there's always a chance that something like FTX bankruptcy happens, and then if you have your funds on a centralized exchange, then you're in trouble. Okay, because they have control of the funds, not you. And at the moment, there's also cases going on with regards to how do you classify the funds that customers deposits basically on these crypto exchanges. So the money that was deposited, the coins that were deposited on Celsius, coins that were deposited on FTX, do they belong to the depositors, like in like if you deposit money into a bank, or do they belong to the protocol, like to Celsius and to FTX, and they consider more like a loan? Okay, so it's until that is decided at the moment, from previous cases, customer deposits in crypto exchanges are just you're just a creditor, like the same way that the company that delivers sandwiches to their offices. You're no different. You got no special privilege by having your coins deposited with a central exchange. Okay, so this is from the point of view of law as it stands at the moment. It might change going forward, but at the moment they're really to be considered test cases because they haven't been tried before. So there are no precedents. Still more about Binance. Some of you might be interested in there was a kind of like a masterclass between the chairman of Binance and Paul Krugman, which is a cryptocurrency skeptic. So if you want to listen to this, I'll just put that in the text. I don't know why I cannot do this. Okay, I'll do it in a second when I stop sharing. Now, on a more happier note, there's kind of like metaverse is still within all these price drops of crypto. The metaverse is still doing well, and we can see, for example, how in Decentraland, which is one of the better known metaverses together with Sandbox, the land keeps selling for for very high prices. Like in this case, sold for $7,000 on different plots of lands in the Decentraland, and they're being bought by brands like Adidas and Atari, because what they thinking is that in the future much of the retail purchasing will happen within the metaverse. Okay, and this is a trend that we've seen from the beginning of the century. It's not a new thing, where people are spending more and more of the available time online rather than going to play football or going to go shopping into the local shopping center, doing anything outside, away from the screen. We are getting almost to the inflection point where people are spending more time online. This is talking about free time, not work time. Okay, the free time, more time online than they are spending outside. Okay, so the companies that they don't fight these trends. They just adapt. They just reallocate resources. So instead of buying, I don't know, billboards or adverts in magazines, they buy adverts online. They buy space in the metaverse. So they want to be wherever their users, wherever their customers are going to be. Okay, and this is why it's important to see these things, because this is telling us, this is companies that made their research and they're putting good money, say, towards some of these projects, because they know that in the future, this is where their customers are going to be. Now, a few things now to talk about Cardano. So as I believe with everything that's going on, Cardano is becoming more and more relevant. Okay. Now, this is the first thing. Finally, there's been kind of like a launch of Midnight, which is a Cardano sidechain that focuses on privacy and on identity. So in a way, it's the next, almost like to be considered, if you know what Monero is, from the point of view of privacy, this is a better version of it. And it's integrated with also the Cardano identity solution, so that it's not just, let's say, privacy to be seen as bad because people have got something to hide, but simply because, there are things that you need to share with the people that you deal with, and even with authorities, but you don't need to share everything. So this is something that will allow people to control what and how they share their own information, to take control of their own information. But for now, so this has been launched, and there is a token. The native Midnight token is called Dust, and you can start interacting with it. 70% of the distribution is for public sale, so the Dust will be available for public sale, and the 25% is split between the three big founders of Cardano, which is kind of like the three components, which are IOHK, Emergo, and the Cardano Foundation. So this is kind of like a very big news within the Cardano ecosystem, and you'll see more and more things come out of Cardano now, since they introduced the smart contracts. A couple of months ago, three months ago, to now we're seeing the ecosystem actually booming, with new projects coming to the market all the time, and new initiatives like this one. This is from the same, and you can follow this guy on Twitter if you want. Yeah, he tweets a lot about Cardano, which is interesting. Now, this is another thing that is interesting from the point of view why people are starting to be bullish on Cardano right now for next year, is because they have invested a lot into something that not many other projects have invested in, and that thing is governance. Okay, and as we enter the kind of in Cardano, and Jonathan, I'll give you the mic in a second, so you can elaborate a little bit on this as well. So we as we're going through the Voltaire era, this year we'll be concentrating completely on governance, and this is, if you just read this paragraph, maybe it will explain it better than I can. Say the real shock to the system will come when they realize that to many there's more appeal in joining a global digital people's movement that wants to improve the world, rules itself, and has a fully loaded treasury at its disposal than there is to becoming a wannabe banker. Okay, this is referring to many of the DeFi projects, and this is what attracts a lot of people to crypto, because they're thinking, oh, it's a quick way of making money. But we know that it doesn't really work in that way. But what is happening now, as the market has gone down, what is emerging in the project, they have got real substance behind them. And Cardano is one of these. Together with the ones that I like above all the, let's say, the major ones for that point of view are Cardano and Algorand, and that type of scientific approach to the progress, and for different aspects to the interactivity between blockchains, Polkadot and Cosmos. So those are perhaps my four most liked ecosystems, because of the way that they are building, the way that they are creating a new level of crypto project that simply wasn't there before. And and also there's this is something else that I will post in a second. And this is the founder of Cardano. He's talking about this, the midnight chain, and there is a full interview, that you can listen to. And it's very good. Although it's kind of like this guy is in his mid-30s, is unbelievable. But although he's very knowledgeable at kind of like a genius level, he does have an ability to put things in simple language, so to be easily understood by everybody. So I would recommend that if you have some time, that you listen to it, because it will help you to understand the things that really matter. And yeah, I couldn't recommend it more. Jonathan, do you want to? Are you? Sorry, I can't see the. Do you want to? Yeah. To elaborate a little bit more on Midnight.
Midnight, you probably know as much as me at the moment. I haven't looked heavily into it yet. I hadn't even seen that the token was now up for grabs, so I'll be going and looking at that for sure. But yeah, the crucial part of Midnight is really for enterprises and businesses, as I see it. So if you are operating a business, then you don't want your competitors to see your books. They'll see the annual report that gets submitted for tax purposes, but they don't know how much you're paying for your suppliers' goods, how much you're selling them for, without coming and investigating you specifically. So at the moment, if a business is trading on any of the open public blockchains, Ethereum, Cardano, then all that information is available for everybody to go in and interrogate and analyze. And it increases competition, but it can also lead to monopolies, and whoever can be the cheapest wins. So it's a race to the bottom and all these sorts of things. So a privacy chain, a data protection chain is probably a sort of a more analogous way of thinking about Midnight. Is it allows you to trade, to buy and sell without exposing all your price data to the whole world. And if Charles has a very good question for you. Do you really want everybody to know everything you've ever bought from Amazon? That can include embarrassing items, perhaps. Maybe you don't want to know that I've been shopping for the latest toenail clippers, or or it could be Christmas presents, birthday presents. Do you want your family to know exactly what you're putting on your watch lists and getting them before their birthdays or the Christmas probably? So all these sorts of things that we take advantage of in the current fiat systems are being replicated in the digital currency space as well. And Midnight is a big player in that. And as well as bringing privacy to your transactions, it's also tied to your identity. So there'll be a way for all your tax auditing and everything to be done still without losing that ability, but maintaining your actual privacy within your transactions. So it's a really, really strong move, and it has been under the radar from 90% of the Cardano community, let alone the world, even though it was written into a white paper several years ago. So yeah, this whole Voltaire era, the fact that the privacy chain is now available, is all tying together to really create the ability to offer nation states a way of managing every aspect of their current operations, but in a digital currency space as well, in a decentralized currency state as well. Because that's the tipping point for me at the moment is, we need DeFi, we need decentralized finance that is, the monetary policies out of the hands of nation states. And at the moment, all the governments are working on is their own central bank digital currencies. So if central bank digital currencies end up winning, then we're in an awful lot of trouble, because it gives them all this access, all this power, all this control that will be, used for nefarious purposes, or public purposes like, social credit systems and things like that. If DeFi wins, then we're in a whole different ball game in terms of the potential for humanity, and I see it as that larger difference. So yeah, Voltaire era that Cardano is now in is all about creating the governance structures, the decision making, creating agreement between us in different ways than we've done in the past. So, most countries, when you vote, you're voting for a bipartisan system. It's either these bad guys or these bad guys. Which ones are less bad at the moment? And the promises they make are going to flip as soon as they're in power, because they're not incentivized to fulfill on them. There's no. So, all this decentralization of finance, decentralization of voting power will really give a much better playing field for us to interact with each other long term. And so, that's Cardano's vision from the beginning, Charles Hoskin's vision from the beginning. And that's what they're working towards. So it's much bigger than just money number go up and I can make a quick buck, as Luca was saying.
Yeah. And it's funny, Jonathan, because it's sometimes difficult to understand this simply by listening to somebody else speaking. But we using these principles ourselves. We just launching a Cardano investment, so we're breaking new ground, really investing in ADA for our AIW group. Not only that, but also creating a DAO, because everything in Cardano is decentralized. And so we are using the same principles ourselves, when we were thinking about, this new investment, to use the same structure. Why don't we, walk the walk and talk the talk in a way? And this is the future. That's how we both see it. So it's these new structures are appearing all the time, and although they're still small at the moment, they will take a bigger and bigger share, simply because of what they can offer. Just think about, if you ever bought, if you have a pension, okay, or you've bought an investment fund, how transparent is that? Could you, anytime you want, any day, could you go and check exactly what's in the investment fund, exactly how many shares they have of every different company, and check their value? Yes, that the funds are valued in the stock exchange, and you can buy and sell units of the fund, but there is a limit to how deep you can look into these things. In a cryptocurrency investment fund, for example, everything is transparent. You can go in, you can see exactly how many tokens of each type they invested in, exactly how many participants there are, the size of the investments. So we're going through from an era where you had to trust a central party to do what they said, to be able to check everything yourself, and not only that, but being in charge collectively, so everybody has a say in how things are done, because why wouldn't you do that if it's possible? And now the difference is now that the cryptocurrency has made this almost like direct democracy possible, and this is how I see it. So imagine, like, we elect representatives to vote for us, but if you were interested, for example, if you were interested in economy or in sport or something else, if everybody could vote on anything that's important to them, would be a different level of participation. Or some people may want to vote just on one thing, but not on others. So you could keep the vote for something and delegate it to other people for other things. These are all possibilities. They are appearing through the blockchain. And we see, so the vision especially of Cardano is that whole countries can be run on the blockchain, from voting systems to how you support public services to financial systems. So all this could be run in a decentralized and self-funded way on the blockchain. So yeah, this is why we do this thing. This is why we talk about these things every week. And although it's still far away, but that's the direction of travel.
Yeah, and one thing on that as well. Look, I was pointed at an interesting site, which was fiatmarketcap.com. So like we've got cryptomarketcap.com where you can see all the prices and have the market caps of the different tokens. You can also look at fiat currencies, and they're all measured in relation to Bitcoin. And, even at the moment, at the bottom of the bear market, when all the news is saying how, shockingly bad and it's going to zero, Bitcoin it's still the 28th largest currency in the world. So, we're talking about mass adoption of a decentralized financial currency. Even at its worst point in, the last 2-3 years, it's still the 28th largest currency in the world. So larger than most countries. There's only 21 currencies larger than Bitcoin. So that's the direction of travel.
It's amazing, isn't it? And when you put it like that, that's interesting. I hadn't seen the website before, so really, really interesting to see. Okay, guys, let's. Do you have any questions? About 10 minutes left. So, anybody has any burning questions they want answered? And by the way, I just want to say it's really nice to see Eric back. So we can see well and good after your ordeal. Lovely to see you, Eric.
Can I ask a question to Jonathan, maybe?
Yeah, go ahead.
Yeah, so good morning, all. Jonathan, I like very much your comment on this, how do you say, big war or big thing in the world of CBDC, who's going to win, or decentralized coins. Could you maybe comment a bit more on that? Because I'm really afraid about the velocity that things with CBDCs are rolling forward, are being implemented with this Sunak Rishi, a person in England and all around the world is WEF. So I would like to hear your comments on the chances for both systems. Thank you so much.
Yeah, I mean, I have opinions and I do a lot of watching, same as everyone else does. And whether I'm worth, have an opinion that's worth commenting, I don't know. What plays out will play out, and certainly I'm not a big fan of the cooperation and the coercion at the highest level of private bodies like the World Economic Forum, and even large big entities like NATO and United Nations and all these guys. I don't like their influence on our nation state elected leaders. There just seems to be far too much collusion and influence there. So that is all agenda driven. The rich want to stay rich, and the threat to the very origins of Bitcoin were Satoshi Nakamoto coming out of and the cohort of young developers around him, or old developers, I don't know how old half of them were. They were exposed to the 2008 crash, and it was like, we just need a better system. They've detached all the fiat currencies from gold standards. They're printing money to suit policy, to get themselves out of hot water, any chance they get. And central bank digital currencies are exactly the same as that. There's no difference between a fiat currency and a central bank digital currency. Zero distance. Don't let anybody tell you otherwise. The only thing that's different about it is that it's more powerful, much more powerful, and much more dangerous. So, the more you spread that message that we don't want central bank digital currencies, we don't want them to be controlling monetary policy and identity information and on-chain activity for the whole of humanity. And the social credit system in China is the picture perfect example of what we don't want. So go and look at that, Google it, and you'll find lots of information. So
there's something actually a lot closer to home as well, Jonathan, which is like if you guys want to just go and check your credit history.
Mm-hmm.
Okay, so just have a look for one of the reference agencies like Experian, that hold the information they hold about you. You'll be shocked. Just go and check it for yourself. Don't just believe it, but they know exactly all your bank accounts, all your loans, all your mortgages, everything that you have. It's visible to them. So and not only that, but all your history going back years and years and years. So so this is why then the insurance company, when they check on you, they can see, why did you miss a payment on your mortgage 12 years ago? Like, really, is that relevant? And do you need to know that information, when you make your decision, if if you want to lend money to me or not? And it's so all those things. I mean, just think about, this is why we're talking about the new midnight chain, because it's the same thing that if you go to a shop to buy a bottle of wine, you only need to be able to demonstrate to the shopkeeper that you are of legal age to buy that bottle. You don't need for them to show, you don't need to show them your driving license or your passport. That's got a lot more information on there that you need to share with them. So if you can control, and it's not about hiding anything, but if you can control what you share with whoever you want to share it with on a need-to-know basis, will be a lot more powerful, and you'll be a lot more in charge of your own data. Because, by the way, the biggest companies in the world, and there's, like, for example, Google, and Amazon make a lot of money selling your data. So that data that is freely available, they make a business out of it. And so they, not only that, but obviously in Google's case, they know everything you do online, and sell that too. So yeah, just realize that. Just do a simple credit check on yourself to realize what is available openly to anybody that wants to check about you.
Yeah,
Okay.
at the moment, I on that note, I track my credit score in 3 different providers: TransUnion, Equifax, and there's all other free apps. Anna Marie's posted one for ClearScore. I use that as well, and that I have to interact in that, because that's the only way you really know what their opinion of you is at the moment. And that's the wrong way around for a relationship. This is my data. This is why am I checking what you know about me before I can dare ask for anything? Yeah.
And kind of like it's funny, because sometimes if you actually don't have credit, your credit score will be lower. So if you don't know anybody money, you're not a good risk to them.
No,
it's funny, isn't it? So they don't want to know really the risk, they want to know the marks. This is how I consider it.
Yeah.
So where are the easy picks there? So that guy's already got 10 credit cards. Let's give him another one, because we can make a lot of money from them. That's how it works, by the way.
Yeah, and another thing is, if you're not paying for a service, then you are the product. So the whole advertising surge from Web 2.0, Google, Amazon, Microsoft, Apple, they know everything about you. They're holding it in their private books, and they're creating advertising campaigns to influence you hugely. So yeah, we're coerced, we're funneled, we're corralled.
Yeah.
Yeah.
Exactly that. So, by the way, I don't know if I've talked to you about this before, but generally, I said earlier on that the volume goes down in crypto, but there's also something that almost happens every single year, which is what they say the Santa rally. Okay, it's almost like prices have an uptick before Christmas. You know, almost like it's designed to give everybody a good feel around the Christmas holidays. But don't get fooled by that, okay? Because it's easy to raise prices on a low volume. Okay, but from when people go back to work in January, that's when you see the real prices, real level, and you can make long-term decisions. So don't make any long-term decision, let's say right now in December. Okay. Okay, any other questions? Guys, I think you're all like coming to the end of the year. You all need a rest. You all need to refresh your brains.
Luca, can you tell us more about your project with Jonathan on the DAO?
Yes, it's
What was I liked?
it's a DeFi. It's a DeFi. So, by the way, for those of you that are not, this is only restricted to the AIW community. It's a you can still interact with the project on your own if you want, but we invest in as a group in AIW. So we created almost like an investment club. So it's a way to pool all the money together, and then we will be buying tokens on a starter, which is a Cardano DeFi projects that's going through the private sale stage right now. And then the tokens that will be bought by the community through a community wallet, which will have more than one signatory on the wallet. So not one person is in control. And by the way, for those of you that not everybody was on the call yesterday, but for those of you that are in the project and want to be one of the signatories, then let us know, because we can include you in the signatory list. So there will be like pooling, and then the tokens they are bought will be staked by Jonathan in his Cardano pool, his stake pool. And then as they get, because the tokens have like an 18 months vesting schedule, so as they get released and then get released to the individual wallets. So it's a very simple concept, but it's used. I mean, I don't know if any of you have taken part in investment class before. So the very simple structures that they're not like a company. They don't attract any tax, but the tax. So whenever they say there's a profit, they will then at the end of the fiscal year, they will give everybody a document saying, well, your portion of the profit is this much, and then you account for it in your own, in your own tax. So this is in a few words how it will be. If you're interested, Eric, we can send you a link to the videos that we recorded, and we still got a few days, because at the moment we're just putting together the multi-signatory wallet, and then we're going to send it to all the people that said that they want to participate, so that they can transfer ADA to the group wallet, and then we're just receiving the contract now, so we're going through the contract when they send it. I don't know if they sent it to you already. Destiny replied to me earlier, so she hasn't sent me a copy yet. So if you have it, just send me the agreement as well.
Yeah,
yeah, and so next week we should be ready to actually sign the agreement and collect the funds. So if you could do it this weekend, Eric, so at least you can let us know if you want to participate. Yeah, Jonathan, if you got the links for Eric, then actually I can.
I've just dropped the first video recording in. I'll do the next one as well. Yeah.
Okay.
And those videos are probably the best way to get up on the details of it. If you're in IW, there's some links in dropped by Hayden in can't remember which channel it is. But yeah,
on Discord. Yeah,
it's in the Discord server. Yeah, there's a whole load of links on doing due diligence on a starter. So really recommend you doing that as well.
Yeah.
Jonathan, is that the one which you sent me an email yesterday? I think through Fluid Pool. Is that the one?
Yeah, that's the A starter one.
Mm-hmm. All right, thank you.
And we have by the way, we have a special deal as well, because Jonathan is involved as well. And Jonathan is going to be, thanks to this investment, is going to be a partner pool of a starter. So people that stake their tokens in a partner pool will get special rewards that are not available to people that stake their tokens with other pools. So yeah, there's a special reason for doing this. Okay. But we're not telling you to invest in anything. So do your own research, guys. Okay. We're just doing like collecting people that want to invest together, but we're not promoting anything. We had an hour video with the marketing person from a starter that you can watch. You can get a pretty good idea, which is one of those videos that Jonathan has posted. And then we went to the next video is we were just guiding you to how to then participate. So how to create a Cardano wallet, how to move funds from your central exchange to your Cardano wallet, and then how to send funds from your Cardano wallet to, once it's ready, to the community wallet. Okay. Any more? And by the way, if any of you need help in how to do that, then Jonathan can cover that as well in his regular session that will start in half an hour. Okay, so if you're not quite sure, because it's and by the way, before we actually we'll probably do another live, Jonathan, once we have the wallet ready. So don't worry about it if you don't if you don't have a Cardano wallet or something else. We can guide you through what to do and how to keep it safe, etc., etc.
Mm-hmm. And if you reach out with direct messages to myself or Luca, if you want to be a signatory in the DAO that we're creating around that as well, and that will help us sort out signatories on the wallet.
Yeah, ideally we would like to have 5 signatories with 3 signatures required. Okay, so obviously Jonathan and I would be signatories. Paul has said that you would, you can be. There was somebody, I think Carol, said
Carol, yeah, in fact both Carols, I think, so we may have enough.
So we might need just another one. So the fifth signatory, I think that would be good.
Yeah.
Okay. Any other questions, guys? Okay, so that was Eric, both for yourself and Ariane. If you're interested, please watch the videos this weekend and then send us a message if you want to take part. Okay.
Yeah, thanks for that.
You're welcome. Okay, if there are no more questions, then we can close the call here. So just to remind you, next week is going to be the last session of the year. Then we take then we go into the Christmas holidays, and I'll be taking a break. So bring your party hat next week. Okay.
Woolly jumpers.
Yeah, woolly jumpers and everything. So it's going to be like a Christmas session. And for those of you in London, that's the latest announcement. We're meeting for a drink. So sorry, there was all last minute, but there was a lot going on in December. We're meeting for a drink on Tuesday. At if you came to the International Student House where we had the session in the beginning of October, we'll be in the bar of the ISH. So if you are around London, Tuesday from 6 p.m. onwards, we'll be meeting there. So if you want to know, just send me a message either by email. I'll just put my email address here again, or on Discord. That's my email address. If you want to come, and I'll send you all the details. So if you're thinking of coming, please let me know. So at least we get an idea on numbers, and we can just then cordon off an area of the bar for our event. Okay. All right, guys. So if just remember to bring your party hat next week, and hope that you all have a nice weekend, and catch up with you guys soon. Okay.
Thanks, Luca.
Good night, everybody. Bye.
Bye.
Thank you very much.
You're welcome.